Well, the big macro data of the month, retail inflation is eased in the month of March. Lata standing by now to take us through the inflation internals. Lata.
Oh, it's an excellent number, 3.34 compared to a CNBC poll of 3.6%. I mean, 3.34 is a distance below the mandate given to the Monetary Policy Committee, which is 4%. So now if you look at the Jan, Feb, March, the whole quarter itself, the average falls to, below 4%. So that clearly is, the average actually falls to 3.73. And that is, again, a good % below the RBI's mandate. For 3 months in a row, the average is standing lower. The market's enthusiasm would be that the Reserve Bank, clearly a June rate cut is given. But more importantly, they will perhaps now expect that the governor may even go for a 5.25 as the end rate of the cycle. Until now, everyone was expecting 2 more cuts and therefore the repo rate going to 5.5. Now the market will push for 5.25 because clearly for the full year, inflation is likely to remain well below the 4% mark. That's the indication from here. This 3.34 is quite a shocker, and that's been delivered primarily because of the fall in food prices to an average of 2.69. I mean, it's a number we have not seen in many years, perhaps in 2-3 years. We've had between 8 and 11% food inflation, so falling to 2.69 is a sight for sore eyes. I mean, it's an across-the-board fall in food prices, primarily, of course, in agriculture, in vegetables, but more so in, cereals, milk, eggs. Eggs have fallen considerably. It's a minus 3.16 year-on-year egg prices. We've also seen a sharp fall in vegetables, minus 7% year-on-year. Pulses, again, a very important component, weighty component in food CPI, minus 2.73. And finally, a big fall in spices as well at minus 4.9. So there's an across-the-board fall in prices. Weighty items like cereals, just about 5.93 below the 6% mark. So this is going to go down as an excellent number for the bond markets. The expectation, of course, now will be that the Reserve Bank will be ultra soft in this cycle of rate cutting. All told, a good reason for a rally in the bond markets.
All right, Lata, many thanks for joining us. That's the inflation picture looking good, so it should give comfort to both the RBI and the government.